Hey folks, Robert H here. Today I'm going to do a follow-up video to my recap last week about risk management. Had some questions in the comments and I'd like to address those. So first things first, this is a trade I took on EIX. This is a recording I did of the live trade. I'm going to play it on 8x speed just because it was over an hour long. I'm going to start pressing play now so we can get the show on the road. I'll be drawing on the left hand here. So first question, do I have any spreadsheets or whatever that I can share for these risk calculations and stuff? Unfortunately, I don't. I've incorporated this into my custom journal that I use here. I think TraderView has some sort of risk options as well. So really, if you're going to be trading real money, you have to have a risk management system in place. You have to have a plan in place. These concepts I'm discussing, not new, not groundbreaking, not revolutionary. If you don't have a risk management in place, some sort of plan, some sort of system, trading real money can be very difficult. So second thing now, I never share my P&L. I've never shared my P&L or my share size or anything in my trades. And why is that? Well, you see my entry, you see my stop, you see my targets, right? Whether I'm doing that with 100 shares or 1,000 shares is irrelevant. The system, the mechanics, the process, the thought process, everything's the same. It's just proportions, right? And why is that important? Because I'm training my mind. I've been training my mind to stop thinking in terms of dollars. Right? I've been down that road before. When I started scaling up, the dollar started meaning things, $500,000, all these things that started affecting my decision making. I was getting emotional, whatever, right? So the moment I standardized, right, and made it more mechanical and thought in terms of R, right? Thought in terms of R, not share sizes, not dollars. It made things just much easier to manage. My emotions, as I said before, were in check. Numbers and stuff weren't scary anymore. It's a system that I'm trying to come up with, right? Standardization, mechanical. So I hope that makes sense to you guys. Now, this EIX trade, just for the purpose of it, easy math, I took a 1R, I set my 1R to $100, right? My stop was 15 cents away. My stop was at low of the day here. Good consolidation. Nice white spinning top, take it on the break of the body. So my entry was 55.75. My stop was 54.75, and my stop was 54.60, so 15 cents. Now, 100 over 15 is 667 shares. I took 676, some sort of rounding error, whatever, not a big deal. But I was willing to risk $100 in this trade, right? Now, here's an important concept as well. When I used to trade fixed share size, I thought I was doing, good, prudent risk management, but I was finding, right? If I traded MU, for example, MU, 500 shares was my fixed size back then. And I would say, okay, my stop distance was 25 cents away. Came out with a winner, came out with, 40 cents per share. That's a winner. What is that? 40 over 25. That's 1.6 R. Okay, great, winner. I came out with 1.6 R. All right. Then I would trade MU again, 500 shares. But this time the setup dictated a 50-cent stop. That was the nearest technical level, right? And I came out with a loser. What did I do? Now my loser was, I think that's 1R. Is it really 1R though? No, I lost $250, right? Whereas in this first example, I won. I got $200, right? And the R's are not even in proportion. I hope that makes sense. But the moment that you the R's start fluctuating per trade, that whole example I gave last week about, winners being 1.5R, losers 1R, it goes out the window. The accuracy, 40, 50, 60% break-even accuracy, it all goes out the window because R, you're not fixing it. It's not a constant. It's a variable, right? And I was finding that. I would go 2 for 4 or 3 for 4 and break even. Why is that? Oh, my losers were bigger than my winners, even though I was thinking they were 1R. But as that previous example showed, they weren't fixed. So I hope that addresses that. Now this EIX trade, first partial, I took at 1.5R. I took off 80% of my shares to lock in profits, right? And this was 55 whole number, which is a big resistance. You can see it tested that for quite a while. Couldn't get over the whole number, but I took off 80%. What does that do? That puts my mind at ease. I can now, there's me goofing around drawing pictures. I can now, trade the price action. I've already put this money in my pocket. So I have 20% left. What did I do? I took another 10% off here after 2R, basically 30 cents or whatever it was. Oh, maybe 40 cents. Sorry, I was risking 15. Sorry, over 30 cents there. And then my last 10%, I was trying to get to the VWAP 54, 55, 40, this level I had here. Price action didn't allow that. I just started scaling out more based on what it was giving me. But when it was all said and done, I scaled out, right? I scaled out 80, 10, 5, and 5. Different, return different, different profit per share. I came out with 1.84 R. If we had gotten to the VWAP on my last 5-10%, that could have easily been a 2R type trade, right? In the end. So I hope that makes sense. And there was one more question, I think. I think Marcel posed that. Marcel's been a member of ours for quite a while. He says, okay, great. What about the times you are correct, you scale out and the price never reaches your price target? I don't want to overcomplicate things, but these situations happen to me a lot, right? And it happens a lot. Sometimes you start scaling out too soon and the price comes back to your break even. If you have that rule, you're now forced to stop out. I used to do this a lot. I would scale out so quick. As soon as the price started moving my direction, I'd start scaling out here, for example, and then a little pullback would happen and I would get stopped out at break even, right? So now I avoid this, but I at least wait for at least some sort of level, right? Something. And in this case, it happened to coincide with 1.5R. That's a decision I made before taking the trade. I said, this might stall here, but at least I'm going to get 1.5R on it when I take my first partial. Besides the point, sometimes these trades, they don't work out. Sometimes they'll go and they'll come back to your break even, whatever, right? You're never going to come out with 1.5R on every single winner. Never. Sometimes you'll get 0.1R. Sometimes you get 1R. Sometimes you'll get 2. I've had 5R when I scaled out really slow and was patient, right? The key though is the losers. They should never, ever go past -1R. Ever, right? Maybe slippage 1.1, whatever, right? As you saw in my video from last week. But you can cut them short. You can go half R, 0.1R, whatever, right? Based on the price action, just get out, right? But that's really the key there. So you're not always going to get this, but the long-term average, large sample size, right? We're talking hundreds, thousands of trades. The moment you start fixing the R, you can start thinking in terms of a system, right? The dollars and all that stuff, and it's not going to mean anything anymore, right? They shouldn't. That's why a lot of people hide their P&L, right? I hide my unrealized P&L, I hide my P&L for the day, all this stuff. I'm just trading R's, I'm trading the charts. And that just makes it much easier for me. So how much time is left on this video here? Okay, we should be approaching the end. As you can see, the price action really fell apart on me here. SPY was dumping, some sort of Brexit news, whatever it was, and I just took the last portion of it off right there, above my break even, because I'd seen enough that this was not coming back. Anyways, that's the recap. Long message. Hope you guys get that. Let me know if you don't. Post some questions down below and I'll try to get to them. Thanks for watching.